Good morning, good afternoon, good evening, everyone. Myself, Arihant Kothari, a 2005 pass out from IST Shibpur, presently leading the Entrepreneurship SIG group and working with NASCOM Deep Tech. So today we bring yet another exciting topic, approaching investors for your venture, a primer, a business. No, however small or big it is, it will certainly look for investments, listen to investors, but many a times gets rejected, and the reasons being heard are not the right approaches. So, to understand this better, today we have with us Aniruddha Nath, who is working with State Bank of India, has significant experience in dealing with businesses, looking after loans, debts, equities, and whatsoever. MBA 2010 pass out from IST Shibpur to take you through, as in how to approach investors for your venture with an objective that you suffer minimum rejections and approach better. Over to you, Aniruddha.
So thank you. Uh, Good evening, everyone, and good morning to overseas participants. I am Aniruddha Nath, an ex-student of this institution, and it's an absolute honor to get back and contribute to my alma mater in any form or the other. It's an absolute honor. So I passed BBA from here back in 2008, and then I did my MBA from here back in 2010. Thereafter, I am working in SBI since 2011, and majority of my professional assignments relate to credit analysis, that too mostly in the SME segment. So I came to know of this initiative of SIG under the patronage of several of our distinguished alumni and well-wishers, and I thought I might be able to contribute whatever little knowledge I have acquired over the years. So I understand that today's session is of educational nature, and I will be expressing my personal views here. Also, the matter I'll be discussing today is of common knowledge. I'll just try to correlate the same with my experience. And in this session, I will use the term investors to mean domestic financial institutions like banks, etc. So this session is designed in a presentation format. And I'll start off the first segment that I have come up is titled Karsan Bhai's Side Gig. So just to confirm, is everyone able to see the slide?
Yes, it's visible.
Just to confirm, slide is okay. It is
Yeah,
yes.
it's visible.
Okay. Then I'll continue. So I'll start with a story. It was back in 1969, and there was a period of lull in Indian business scenario, and it was dominated by license permit Raj at that time. A 24-year-old Karsan Bhai Patel, who originally hailed from a family of farmers in North Gujarat, started an after office venture, a one-man show, what is now known as Nirma. Now, Karsan Bhai, at that time, he was working at Lal Bhai Group's cotton mills. Now, remember, Lal Bhai Group was then a very well-established business house in those days. And later, he also worked at Geology and Mining Department, a state government department. So, Karsan Bhai had a very steady source of income from his job. And there was no reason that he should start another venture besides this one, besides his existing one. So, as a side gig, he started preparing washing detergents on his own. He was a BSc graduate. So, he started preparing washing detergents on his own at his residence, and he started cycling through the neighborhoods selling them door to door so as to augment his income. One such unfortunate day, he lost his daughter in a car accident. And after some time, having gathered courage to cope up with the grief, he carried on with his venture with renewed vigor, determined to immortalize the name of his daughter Nirupama in the pages of Indian business history. At a price of rupees 3 per kg, it was an instant success. After 3 years, Karsan Bhai felt confident enough to quit his job to pursue his business full time. But due to lack of any such precedent in his family, he felt that the venture was fraught with failure. However, farmers from North Gujarat are known for their spirit of enterprise. So, Karsan Bhai set up a small workshop in an Ahmedabad suburb. The Nirma brand quickly established itself in Gujarat and Maharashtra. The high quality and low price of the detergent made for great value. Fueled by homemaker friendly advertisement jingles, Nirma revolutionized the detergent market, creating a entirely new segment in the market for detergent powder. At that time, detergent and soap manufacture was dominated by MNCs, with products like Surf by Hindustan Lever priced at around 13 per kg. Within a decade, it became the largest selling detergent in India. The enterprise was labor intensive and now a leading employer, employing about 18,000 people. The products are made without phosphates and thus environment friendly. The enterprise is now a 7,200 crore AA rated entity with varied interests in consumer and industrial segment. So from this story, I will highlight certain features which are more or less present in every other successful entrepreneur, be it in India or the world. Number one is the vision, conviction, and perseverance to walk that extra mile and to do something extra. Second is undertaking risks. Third is value proposition with some sort of USP. Fourth, generating employment and economic value. Five, facing trials and tribulations and come out successful. May not be personal trials always, but maybe in general, they had to face some sort of trials and tribulations. And final is concern for the environment. Now, here environment, by environment, I mean the overall stakeholder environment. So he should be concerned, he or she should be concerned about the stakeholder environment around him. So that's a summary. So that brings me to the next segment. The next segment is titled From an Investor's Eye. So when an entrepreneur approaches an investor for investments, investors would normally look for the following. Number one is business plan. Now, if I try to describe it, a business plan is more or less the executive summary of your business. It should include your objective, number one. Your objective, which should be well defined and specific. Like an objective can be to say capture 5% of the medical testing market in India by 2026. So it should be very specific. Second is your product or service with its USP. Your USP maybe say you have got a patented product. That is your USP. Maybe you operate in a geography where there are very few players. That is your USP. Maybe you have got a talented full of human resources, which is common in the service industry. So that will be your USP. Then comes your management profile. Maybe you yourself are inexperienced. It's okay, fine, but you have got in place technically sound and experienced people from your industry in your team and key positions. So that's perfectly acceptable. So your objective, your product or service with its USP. Then comes management profile. Then comes basic market and industry study. This is all under the subhead of business plan. Do study the trends and opportunities in your industry and note them down. Do mention your source of survey. Like there are you go to the sites of various credit rating agencies, or for that matter, various economic uh, publications. So there you can get a lot of market survey. So you have to, before venturing into anything unknown, you have to check what are the trends, what are the industry outlook for that particular industry. Those we have to check, and then only you should venture in your venture out. Okay. Then under the business plan, you should provide your financial projections. Your financial projections should ideally be close to realistic. You have to, in case of working capital finance, that is current asset finance, you have to ideally have to give projections for the next 2 years. And if you are going for term finance, then you have to give the projections for the entire tenure of the asset, or at least the term for which you propose to get the finance. So by realistic, I mean don't hide anything. Like, say, for while you are projecting, you see that in the first year of operations there will be a loss. So it's perfectly okay and perfectly acceptable. Don't hide anything. Give a realistic projections. Otherwise, no. Bankers are trained to means they will feel that it is not realistic enough. So give realistic projections. Then comes, you should give a SWOT analysis with risk mitigation for your weaknesses and threats. One example maybe in this age of tariff wars, as you can see. So maybe your key market has an anti-immigrant policy. So to counter that, you have planned to increase overseas hiring. So that can be a risk mitigation. So you have to identify the risks in your business, and you have to give mitigants for that. That is appreciated by the bankers. And then comes any alliances with suppliers or end users, or say marketing and distribution channels. So suppose you have got a letter of intent from your prospective client, so that ensures that your offtake for your products is almost streamlined. So you try to give any kind of letter of intent or any kind of agreements that you have formed with your prospective clients. Those will be appreciated by bankers. Now next I come to compliances. So while soliciting investments, one is expected to have in place, or at least have applied for, all applicable regulatory clearances, including environmental and statutory ones, and also arrange for utilities and valid land related documents. So this depends on the type of business. Like, say, for example, for food processing industry, FSI license is a very basic requirement. So say for manufacturing, pollution is a very basic requirement. Say for import industry, IEC is a very basic requirement. Not only that, suppose you want to set up a drinking water bottling setup. So you ideally have to get the license for that specific capacity. Say 1 liter, 5 liter, 10 liter from BIS. So licenses should be there, or at least if it is not there, you should have applied for while approaching investors. Now, by utilities, I mean power, water supply, these things, and fuel. Say, I had one particular experience. There was this particular unit. It had started in one industrial park in and around Kolkata. I wouldn't name that, but the park was advertised very heavily. So that unit started, and the unit was promised that power connection will be easily available. So even after a considerable time, the unit couldn't get power connection, and it started off with diesel, so as an alternative. So within a few months, it became non-viable. So you have to have those arrangements for power and water supply and fuel, other sorts of fuel. And then land could be on rent, lease, or own, but there should be a valid agreement for your land. Okay. Then comes promoter stake. Initially, investors are a major partner in your business, and they expect that you should have at least some minor financial stake from your side, which is commonly called by the bankers as margin. So, margin is normally comes in the form of your own stake. It may be coming from friends and relatives also, unsecured loans. So that's accepted. So you have to ideally show the source of funds, which may be your own funds or maybe friends or relatives. So and also providing the margin at one go. One may also opt for providing margin on pro rata basis. And this, I personally have come across cases where margin have been provided on pro rata basis, but this is very done on very selective cases. Okay. Then comes key metrics. Investors expect the promoters to be familiar with certain basic metrics of business, some operational in nature, say like capacity utilization, some financial in nature, like revenue, operating profitability, break-even point. So, and in the age of say quick service, quick commerce, so gross order value uh, maybe a key metric for their survival. Maybe for the telecom industry, average revenue per user, ARPU, that is the key metric for telecom industry. Maybe for hotel industry, revenue available per room, RevPAR, that is the standard metric for hotel industry. Maybe for oil and gas, the gross refining margin, or maybe the throughput, that will be the standard key metric for that particular industry. So you have to be conversant with those key metrics, and on a regular basis you have to measure it, and say suppose your industry standard is this, and you have to uh, compare with that. Okay. And once your business is above a certain size, investors also expect you to be familiar with some financial metrics like operating cycle, current ratio, gearing, debt equity, DSCR, sensitivity to adverse situations. So these are certain key metrics you have to be aware of. Okay. So so even though in most financial textbooks or in the net, you will find the recommended key metric, recommended ratios. But in real life, more or less, it depends on the industry and the type of business one is operating, and may vary slightly. But more or less, these are near to these textbook cases, you can say. So one example I would cite, like say in case of hospitality industry, maybe it is a asset heavy industry. So in that case, maybe current asset as a sole indicator may not be that relevant. But however, say, if we say deduct the term loan installments from the current liabilities, maybe that will become relevant to some extent. So key metrics, overall, the summary is that you have to be conversant with the key metrics of your industry. That is the thing. Then comes to continuity plan or contingency plan. Sometimes unplanned and unforeseen circumstances may arise, which will require mitigation for continuity of the business. So you have to anticipate that. And the better you are estimating, better you are, you can say, anticipating those unplanned things, better you will be able or better, you will be equipped to handle your failures. So a fallback plan or alternative measures to revive the business or risk mitigation to threats, that is well appreciated by investors. Maybe suppose you are the maybe it is a partnership firm and there are two partners. So maybe say A is the key partner and maybe B is the alternative. Maybe A is the to go person for everything. So you should have a alternative plan for that key man A. That's the thing which is appreciated by investors. Then comes planned expansion or diversification. So businesses will grow in scale and complexity, and to sustain in the market, you may feel that it is the right time to undertake expansion or diversification. So a planned expansion or diversification will be helpful for you rather than dabbling in uncharted territories without market assessment. So you have to plan for your gradually as you grow your scale and scale of business. So you will have to plan for your next expansion, next diversification, that you have to plan. Again, you will come to market survey, back to market survey. So after doing proper market survey and proper risk mitigation, you will go for expansion or diversification. So coming to the next slide, that is pitching for funds. So how does one apply for new business loan for the first time? So I'll since this is presentation is in my personal capacity, so I'll not I'll refrain from taking any name of any banks or any financial institutions for that matter. So at present, most banks have contactless portals, that is through dedicated websites or URLs, which is common for both private and public sector banks. So you have the option of choosing your financial institution and branch even. So by going to that portal, you can validate your KYC, your statutory returns, estimates, and can obtain an in-principle approval. But this has really, I mean, with the use of AI tools and all, this has really simplified the underwriting process. And this is in addition to traditional channels. However, from my side, the preferred approach would be to go to traditional channels and to have a talk with the person in charge. Do carry your business plan, licenses, financial projections, quotations for fixed assets. And once a preliminary thumbs up is received, then only you go and apply online and get your in-principle approval. That will be appreciated. So rather than directly applying, you so there are beyond a certain threshold, there are relationship managers in almost most of the banks. So you contact them. So after having a preliminary discussion, you then apply to these contactless platforms. Then coming to product mix. The product that will be requiring will depend on the nature of your business. Say for current asset finance, you will need a working capital. For a fixed asset acquisition, you will need a term finance. You might need a guarantee for order execution. For raw material procurement, you might need a letter of credit. For foreign exchange risk mitigation, you might need a derivative product. So you have to discuss with your branch and your relationship manager and then finalize your product mix. It can be a mix of all these things. So there may not be a particular one product for all. So it may be a mix of these things. Then comes optimizing business costs. In financial institutions, pricing depends mostly on the risk profile of the applicant. So building a healthy risk profile over the year by good repayment record, improving upon the vital financials of your business. Also, you have to be prompt in your statutory compliances. So all these things you have to keep in mind. Then try to stick to your agreed lending terms. Say, for instance, you have agreed with your financier that you will maintain a minimum level of capital going forward after, say, accounting for your personal drawings. So you try to stick to it. So in those, your profile will not be built up in a day. It will take some time. Don't be in a hurry. So maybe in the year one, your pricing and all your maybe will not be that what to say will not be that attractive. But over the years, as you create a good profile of yours, risk profile, so it will means your automatically your pricing will get more attractive. So some other ways of optimizing costs are by registering for URN, Uddam registration. So these are certain things like bankers will uh, try to accept something which is means under say something if you are coming through a very organized channel, say register you are having sorts of registration or sorts of licenses. So bankers means appreciate that. So registration under Udyam is one such thing. Then other ways of getting competitive pricing is opting for funding other than repo-based funding. So repo had been on the higher side for last 2 years. So you might opt for other than repo-based funding. And the final thing is reassess. So investors mandate periodic exchange of operational and financial metrics, as discussed earlier, which are related to your business. So those operational metrics you have to share with your investors from time to time, say at periodic intervals. So those things are not your basically trade secrets. You have to share with your investors, say, as you get as you list yourself, those things will have to be shared with other stakeholders also. So these things facilitate a review of the overall situation, and if required, it will help you correct your course in consultation with your investor. So that's for pitching for funds. And then coming to the concluding segment, that is titled an appeal. So the first item is ethics. It's my personal observation that engaging in unethical business practices may sometimes appear to reap short-term benefits. However, in the long term or even in the medium term, the cover is ultimately blown up. On the other hand, if one is able to practice ethical business practices, goodwill will automatically accrue in the business. So do encourage ethical practices in business, including true and fair reporting practices. Then comes adopt green. Adopt green practices. Don't be a laggard. Financial institutions have their own internal aspirations and vision for themselves, being green, and they do encourage and give extra support for ventures undertaking expenses for adopting green practices, and this comes often at concessionary terms. Then comes inclusiveness. See, there are many vulnerable communities in and around us, so you will encounter many such persons or communities in your business, be in the form of supplier, employee, etc. So it's very important that you embrace everyone as he or she is, and you try to facilitate their job. And the final thing is adopt best practices. See, I have come across organizations who have incorporated some industry best practices and earned a goodwill for themselves. One way is to get yourself certified in line with industry best practices. like say, for instance, ISO certification, say Z certification, say for pharma, it's good manufacturing practices. Then comes Six Sigma. So I have come across this kind of organizations who have carved out a special place for themselves, and investors, they always look out for these things. They try to reward such organizations by passing on any kind of possible benefits to them, of course, within the regulatory framework. So try to adopt best practices. So with this, I wrap up my very short presentations. So if you have any queries, please let me know.
Thank you, Aniruddha. We
Thank
have
you.
some questions. So one of them is you. Let's start backwards. You mentioned about ethics. So for lottery businesses, so and gem and jewelry businesses, so people become skeptical, especially banks and financial institutions when dealing with them. So any two or one or two good best practices or any pointers from bankers point of view, financial institution point of view, like how do the owners or they deal with them, given that it's not a
Uh,
startup but a established company.
Yes, definitely. See, first of all, bankers as a policy, I won't name, I will refrain from naming any kind of banks. So, bankers as a policy, they try to, they will not enter into anything which is speculative in nature. Okay, that's the very first policy. And as pertaining to your gem and jewelry business, they do have their own policies. Maybe it's understandable that the price is fluctuating in nature, but they have a very means they have their own policy. Maybe I can the scope of this presentation does not permit me to discuss that particular policy, but there definitely is a policy for gem and jewelry and such other sectors which are very volatile in nature.
Understood. So, Aniruddha, from a business owner's point of view, if there are issues with the bank, where do they go to? If they, given that they are startups.
See, first of all, given the startup environment that's in India, so banks have identified certain nodal branches for startups. Say for each bank, there will be one startup branch. So why that? Because startups are very like they are like babies, so they need to be cared for. So like that, they are very vulnerable to failure. I am not giving any kind of negative annotation in this in my statement. So, but they are really they are vulnerable. They need to be they are banks need to go walk that extra mile for them. So there are dedicated startup branches across different banks, most banks I would say. So maybe connecting with them would be helpful because banks and not only that, in those particular startup branches, it's in Kolkata as well. So those people manning those particular branches, they are versed with the means needs of the startups. So that's it, sir.
So, Aniruddha, related to that, like what is banking ombudsman and when should one go there?
See, ideally, when one is say they are banking is a service industry, and every service there may be certain uh, maybe uh, maybe disagreements with the service provider. So banks have their first of all banks have their own set of means escalation metrics. You can say all banks have the escalation metrics. So suppose you have exhausted that escalation metrics and you have written to the bank and you have gotten acknowledgement also, but bank doesn't reply to you. So after say for if you are not banks are actually obligated to reply to you by within 30 days. So within that, suppose you are not getting that particular satisfaction. So then you can approach the RBI. It is through a common platform. So you can either write to that particular nodal officer of RBI, that is the Eastern Zone, or you can, they have a dedicated web portal also. So there you can raise your ticket and you get your, means they will set up one, they will, first of all, they will ask for explanation from that particular bank. And then they will also, if required, they will call also the bank officials and at a particular their office, and then the customer will also have to visit that particular branch, and they will ultimately the issue will be resolved. Means there you should have some channel. Means RBI acts like an arbitrator. So there at their office, you will get your explanation. Suppose it is a third party, so banks will have their own view and customers will definitely have their own view. So there, most means all the queries get resolved. There is nothing means that is left unresolved.
So, Aniruddha, there is a reverse question to this. You means not you. I would say that banks also have their set of complaints with businesses, and they don't obey instructions, and they don't pay their loans, or maybe businesses fail. Business if businesses fail, it's okay. But if they don't obey instructions, if there are so of course one way is penalty in terms of interest and all. But even if that is not followed, what are the other ways bank penalize businesses?
See, first of all, you have to understand that, say, suppose uh, I am going to the extreme step of, means, say, suppose uh, recalling one asset, and say, suppose bank is advertising that it will put on auction a certain asset, suppose. But you have to understand that bank is not in the business of selling or trading of those assets. Bank is in the business of providing business loans. And since capital, the very first chapter of economics says capital is scarce and you have to put capital into the best possible use. So, suppose an asset is non-productive. So, first of all, our primary objective will be to see whether that business can be revived or not. So, there are several means of restructuring, revival. So RBI has very definite set of guidelines on restructuring and rehabilitation of businesses. So only when there is no such means visibility that the business can revive, then only means bankers try to recall that loan and give that capital, divert that capital to some other productive business. So see, there will not be, I am not going into any kind of negative annotation. So bankers' first preference will be to help that business. See, in the period of COVID, it means business failures were rampant. So banks, first of all, they tried to come out with very lenient terms and conditions. That's number one. Secondly, they gave extra credit also at very liberal terms. And not only that, there were several instances of rehabilitation of sick units. So there are very means structured guidelines in this regard. And you wouldn't believe that bankers really I cannot reveal any kind of names here, but I have come across instances where bankers even approached even approached RBI also to means RBI in that particular case. Bankers were restricted by RBI's certain clauses for rehabilitation, but means ultimately all the means consortium lenders, they went to RBI and asked for a special dispensation for that particular unit. So our first objective will be to revive the unit through rehabilitation measures. There are several. Maybe extending the term is a very maybe one of the measures. So and the extreme step will be to recall that asset.
So, Aniruddha, one last question we have, so what would you prefer? for an industry, you can name the industry by examples, whether to go via VC or whether to go via bank till it raises an IPO, given the end objective is to raise an IPO after 7 to 8 years. So you can name the industries, like if it's hospital industry, you should go bootstrap, work with bank, and then go to IPO. So what would you prefer? Two, three
See,
examples.
see, first of all, it will be means foolish of me to name a specific industry. India is blooming like anything, and there are lots of industry. So, as I said earlier, first of all, you have to see what is the market. You have to estimate. You have to go through the outlook of various industries. Okay, I'll not name any particular industry. It will be foolish of me to do so. So one
Because we've
basic
seen
approach.
that there have been delays in terms of the companies, SMEs or big ones giving too much equity to investors, and that delays their IPO process. So with banks, of course, the major funding is debt based, and you just pay the interest and loans. That doesn't happen. So just
So
from
see,
example,
so it's my personal observation that see, first of all, you have to understand that banking means debt and this IPO. This can go hand in hand. So there is nothing which means if you are going for IPO, you cannot have bank
no, but
debt side by side.
companies take pride
But
in saying that they are 100% debt free, and they go to IPO and they say its shareholders will now, and
my observation would be that first of all, you should go for IPO uh, when you are estimating that there will be a quantum jump in your revenues and other metrics. Then only you should go for a IPO, because IPO entails a certain cost that you have to calculate. And there are several means capital market players in the industry, but you have to understand that there is a certain cost. So only when you are expecting a quantum jump, say 3x, 4x like that, so you can go for IPO, and bankers will try to facilitate it. And regarding debt free and all, I would say that uh, there are certain metrics like debt equity ratio, and there are means textbook ratios also. So if you are within that particular ratio, it's fine. It's there is no harm, there is no risk like that. But IPO, you should go. You should consider the not only that. See, once you go for IPO, you have to have very stringent means disclosure policies that you have to see, and you go through the newspapers. In a, I think in the last week or so, SEBI has means made very made it more stringent for to come up with SME IPOs. You will observe, but there is nothing which means there is no negative annotation. As I once again say, you can always go for an IPO, but there are certain costs. Not only that, there are also compliance costs. Like there will be more stringent disclosure, so you have to be prepared for it, like that.
so thank you, Aniruddha. That was a insightful presentation, and your views to the questions raised were equally uh, valuable as well. And we thank you for giving your time to this session on approaching investors. And we expect that the participants will immensely benefit and face less of rejections and know uh, who to approach, where to approach, and how. So, given that, I would like to end this session, and goodbye, everyone. Thank you, GAABESU. Thank you, the Entrepreneurship SIG, and thank you, IST Shibpur, for giving me the chance to host this session. Look forward to meeting you all soon. Thank you. Thank you.